And on one hand, it's not been very long, but on the other hand, a lot's happened the last couple of months. So,
Yeah.
both with me personally, but then much more importantly with the world as a whole. So, thanks for having me back. Yeah, this is gonna be. I'm really looking forward to this.
Yeah, absolutely. Yeah, I'm trying to remember, when did we record the first episode? Was it last year, or was it early 2023 still?
No, it was early this year. I think your podcast was the first podcast I did uh, at all regarding Bitcoin. And since then, I've done Preston Pish's podcast. I've started my own podcast. I have a couple episodes of that out now. Hoping to do more in the next couple weeks. With let's see, Foss and Jeff Booth and Jason from Thank God. And anyway, so yeah, I've been around a bit on the shows, but you're my first one, so I figured you should be. You asked me if I wanted to come back, and I was like, why not? So, and plus I had questions for you too, so I'm hoping to learn a little bit from you during this. So yeah,
Yeah, sounds great. Yeah, I mean, love to have you on. The first episode obviously did amazing, and I think let's just jump right into it because I'm sure the audience wants to hear
yeah,
what you have to say. I think starting off, we can go with what's kind of happening in the banking system right now. We saw First Republic, which I think someone said was like the 13th largest U.S. bank. We saw their stock price get obliterated. I think it was on Tuesday or maybe today, Wednesday. Um, can you like contrast or explain maybe like what's going on and maybe contrast the dollar system with the Bitcoin system?
yeah, sure. I'm really glad you asked me. I tweeted that as it was happening or just after closing hours or whatever yesterday, and people liked it. But anyway, I hope your editor puts up my tweet with the chart because the chart is just mind blowing. It might be the 14th largest bank, it's 13th or 14th. It's up there somewhere. It's a major bank. It's not one of the big four, but it's a major one. So yeah, obviously since our last recording, we had last month in March we had the Silicon Valley Bank and the other two banks or whatever. And then we had the FDIC issue in response to that. So the first big problem was Silicon Valley Bank and the banking crisis that was beginning to unfold. It was like 2008 level, more or less. Basically, if it continued on, it would have been. It wasn't at first, but anyway. So it was a big problem. Number one. Number two, we decided to basically throw up the table with the FDIC, and then number three, we basically reversed half a year of quantitative tightening in a couple weeks, that the Fed did. So that was a third big thing that happened within those couple weeks. And now we have this fourth thing, it seems, of First Public Bank that yesterday decided, just I'm gonna head out. So yeah, it completely crashed. I don't know how far the stock's down, but it's like almost irrelevant to say. It's like 99, 98, 99.9, it's basically just collapsed. And the funny thing, Joe, is that on Twitter, even though I was very critical of when the Silicon Valley Bank was happening, what the Fed was doing, FDIC, and now this, it's like it's been amazing to me how there's been so much. And granted, there's a lot of positive feedback of people that agree with me, but there's been a lot of negative response to that, saying that, oh, your time preference is too short. Oh, that's just short term or whatever. Because for those that perhaps haven't been aware, Bitcoin has more or less doubled in the same period of time. And I'll get into why that is. I think it's probably self-evident, but point being that the people that are anti-Bitcoin and the people that think Bitcoin's a scam have really come out of the woodwork since the beginning of these banking troubles over the last 60 days or so, 60, 90 days. Actually, no, not even that. What, 45 days? And they've really, like, oh, it's too short time preference. You're using the last 5 days to judge everything. You're using this banking crisis to judge everything, blah, blah, blah. And it's been really frustrating, Joe, frankly. I just live my life, whatever, I don't care. But yeah, I have my convictions. But it's so illogical because they're saying you can't judge last week. You can't judge the whole health of the global financial system on the last week, and you can't judge one bank for them all, and blah 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 blah. And the funny thing is that they spend so little time following my account, and they spend so little time listening to my podcasts or hearing my perspective, that it's like I'm one of the lowest time preference people on Twitter. It's like most half of my threads, I'm talking about 100 years from now, 500 years from now, 1,000 years from now, which granted they're all speculations, but it's like it's so funny to me when people accuse me of being a short-term minded, profit taker or whatever, where it's like the whole Bitcoin thesis is about risk aversion. And so that was one of my tweets yesterday about the First Republic Bank, was about how what ultimately at the root of it is going on here. The I did not predict Silicon Valley Bank. I did not predict First Republic Bank. I'm not that smart. I'm not in those boards. Like I'm not claiming that. But what I am claiming, what I am saying, what I've been saying for a long time, both on Twitter and off Twitter, my personal life, is that fractional reserve systems have to decline back to zero sooner or later. Now, that can happen via nominal terms or that can happen via real terms, but one way or another, if there is a fractional reserve system, meaning something that's creating value out of thin air, or in biblical terms, something that is reaping without sowing, or in physics terms, something that's breaking the law of conservation of energy, or in cryptography terms, something that's violating double spend problem. It's like all these things are saying the same thing. It's when you create something out of nothing, aka fractional reserve, it's inevitable that it has to correct back to where it started with, like a full circle. And so it's really that simple, I would say, is that every fractional reserve system sooner or later has to return to its baseline reality. And if the fractional reserve has been so great that the baseline is zero, then it returns to zero. And so ultimately that's what happened with FTX last year. People like to criticize Bitcoin. It's like because of the FTX thing, and it's like it's the exact same thing. I was telling people, get out of FTT token, get out of FTX, because it's a fractional reserve system. Sam Bankman-Fried's fractional reserve crypto exchange, and they just kept lending and lending and lending, and it collapsed. It collapsed to zero overnight. And it's the same thing that happened with Silicon Valley Bank. I know not the same thing, but it's the same idea of a fractional reserve, and it's the same idea with what's just happened with First Republic Bank. Again, I hope your editors put up my tweet, because my whole point in that tweet is saying that our human psychology, our human minds are risk averse, and they should be, because our brains, we're not supposed to touch hot stoves, we're not supposed to play with guns, we're supposed to be risk averse, biologically, because against asymmetric downside. And so we're very concerned about buying Bitcoin, even if it's $100, or even if it's 1% of our assets. Because what if it goes to zero? It's so small, it's so new. What if it dies? What if it crashes? The chart that is First Republic Bank, that chart is what people fear with Bitcoin. They fear that it's going to be 30,000 and then boom, it's just going to gap down to zero or something. That's what they fear. That's what everyone fears when it comes to Bitcoin, because they see altcoins do that. They say FTX do that. Ponzi schemes in the past do it. That's what they see, and so that's what they assume is the worst case scenario. But the whole point, the whole thesis, the whole idea I've been putting out there is that fractional reserve systems trend to zero forever against full reserve systems. Maybe in the short term, fractional reserves go up in value, but long term, a full reserve system is inherently worth more. And so, point being that the irony is that humans think Bitcoin is that thing that could go to zero because it's small in comparison to banks, and in comparison to central banks, in comparison to the bond market, in comparison to First Republic Bank or Silicon Valley Bank. And so we assume those things are safer because they're bigger, whereas the whole point is that it is lower risk to have your energy placed in a smaller full reserve system than a large fractional reserve system, because it's the exact thing that just happened with First Republic Bank. And the horrible irony in that is that people, in trying to avoid risk and avoiding Bitcoin and listening to their financial advisors give advice on something that they haven't done the work on, the unfortunate reality is that they lose more money, like in real time. Like the S&P 500, and this was one of my comments in my tweet, was that the S&P 500 went down 1.4%, 1.2, it went down over 1% yesterday, the S&P 500, which all in all isn't that bad. But the irony is that if you own the S&P 500, you were exposed to that spike down from First Republic Bank yesterday. That's one of the stocks and the S&P 500, and boom, it's gone. So yes, you're diversified in the S&P 500, and that's a good thing to be diversified if you're thinking from that mindset. But the Bitcoin mindset is, this is a full reserve system. And right now, you're diversified in a large series of fractional reserve systems or systems that are, or companies and assets and securities that are exposed to fractional reserves. And you have to diversify into a full reserve system to protect all your exposure in these full reserve systems. And so, sorry, I've been going on a lot, but the great irony is that people will not even take a 5% allocation to Bitcoin or a 3% allocation or 1% allocation to Bitcoin because they're so terrified of losses of 1% when it's like your S&P 500 moves up and down a percent any given day. Bitcoin's up 4% the last 5 days. The S&P 500 is down like 2% the last 5 days, which, yes, Twitter, I understand. You should not base your financial decisions on the last 5 days. But the point was that, in my mind, it's inexcusable to have anything under well, 5% is a good place to start. I guess I'll put it that way. But the more important thing is to get off zero. And 5% is so logical because most people have massive exposure to fractional reserve systems. And most people are so ignorant, for lack of a better word, perhaps uneducated or unread, or I don't know, what's a more respectful word to say, but people don't know all the risk that is there. That's the point I'm trying to make. And as counterintuitive as it sounds, Bitcoin is lower risk in those things because it can't gap down like that as long as it remains fully reserved. And it's remained fully reserved for 14 years. It's audited every 10 minutes, and there's zero individuals that could violate that. So it's some unknown that could turn it into a fractional reserve. So anyway, it made my point, but the larger point being that the last 5 days and the last 50 days have been nothing but validation that you have to have exposure to a full reserve system in case the fractional reserve spirals out of control. So, yeah.
Yeah, I think that was well said. I mean, a lot of people, think that their 401k or their S&P 500 index fund is fairly safe, but you're right, like it's composed of things like First Republic Bank, where it's like that can literally gap down, very fast and trend towards zero even faster than Bitcoin can, and even during its bear markets. And so it's crazy to think that there's risk everywhere, right? There's risk with just about anything you do. There's risk in life, but First Republic, other banks, other large institutions within the U.S., there's plenty of risk there, and Bitcoin is this one system where it's like it's very difficult to change it. We know pretty confidently that 10 years it's going to still be working, 20 years it's going to still be working, 100 years it's going to still be working, and as long as it's still working and the 21 million supply cap still exists, then it's going to be a better system than something like the dollar system, which we know there can be short periods of time where, less dollars can exist, like M2 can go down, but that's not very sustainable. That's eventually going to reverse its trend and it's going to go back to its normal exponential growth of dollars because that's how the entire system functions. You have to create more and more debt to create more and more dollars to sustain that 2% or 5% or 8% CPI inflation. So yeah, I
Yeah.
think you're spot on there.
Yeah. And if I could add something to that, is that, it's like people think that sometimes people have the false impression that I'm predicting, oh, hyperinflation in the United States of America. And it's like, that's not even the point. The point is that it's possible. And so, yeah, I don't think hyperinflation is going to happen in the United States or perhaps even Europe with the euro. Perhaps not ever, or perhaps not for a long time. Perhaps we all go extinct and die first. But the fact it's possible is the whole point. And I've looked very long and hard. You have too, but we can't yet find a way in which that occurs for Bitcoin. And so, even if Bitcoin does hyperinflate, die, and collapse or whatever, let's say it's possible. Bitcoiners don't like it when I say that. But let's say it's theoretically possible. Let's say there's a 1% chance that occurs. Like, we know from history that these fiat currencies have an extremely high probability of hyperinflation. And we've already seen multiple, like, happening now. You have where? Nigeria, Sri Lanka, Lebanon, Argentina, especially the last couple of weeks. And then, Venezuela, Zimbabwe, all those examples. But yeah, point being that it's like, I think people think that Bitcoiners are absolutists, and perhaps we are, but even if you're not an absolutist, to me it's obvious because the probability of a fractional reserve system deteriorating to zero is inherently higher than a full reserve system. And this isn't a political stance. This isn't an anti-USA stance. This has nothing to do with this being America. This has nothing to do with the political aisle. It's just, as Foss would say, it's just math, or Saylor would say, it's just energy. And if you're violating the laws of physics, it's inevitable that something has to give. So, yeah.
Yeah, another thing going off First Republic that I think is interesting is the downside volatility in First Republic is well deserved, right? Like there's actual risk that their liabilities exceed their assets, right? And that's what basically why a bank run occurs. Whereas you contrast that with Bitcoin's volatility, Bitcoin goes up in these parabolic
Mhm.
bull runs and then it falls the 80% or the 85% or the 70% that Bitcoin does. And it's not like Bitcoin is falling because its liabilities are greater than its assets. Like it doesn't have a balance sheet. It's still 21 million Bitcoin. The monetary properties are still the same. The core principles of why Bitcoin is better money than dollars, gold, raised stones, salt, glass beads, whatever, those properties still exist. And the volatility is just due to its rapid adoption. And then it got overextended and now it's like falling back
Yeah.
down. So I kind of want to get your thoughts on Bitcoin's hyperbolic adoption. What do you think there?
Yeah. Well, yeah, that's a great question. I think, yeah, bridging the gap there, most people view Bitcoin volatility as inherently risky because they're used to thinking of volatility in terms of stocks. If a stock is super volatile, like First Republic Bank, it's because you have these major shifts in assets versus liabilities, or they had a horrible earnings release, or this, that, whatever. But the difference with Bitcoin, or with any commodity for that matter, is that there's no cash flows, there's no CEO, there's no yield, there's no liability. It's like all these things, they're different. And so, yes, to your point, Bitcoin's volatile and then it goes down and up just like stocks. But the difference is that it can't have its debt obligations, or it can't lose a customer because, it's different because it's not a security. And so that's true to the downside. Like that's the point I've been making thus far, but it's also true to the upside, to the point that to the question point you're making there, that we inherently think it's the same to the downside, and so we also inherently assume that there's only a certain amount it can go up. We think like, oh, well, stocks, like say Apple or Amazon or whatever, like, well, they can go up 100x or 10x. So yeah, maybe Bitcoin could go up 10x or 100x too. Maybe it goes from 30,000 to 300,000 someday, or maybe someday in the far, far future, maybe $3 million, if it's going to be the next big thing, like how Apple was the next big thing. And I believe that's flawed logic, because I believe, again, conversing the downside instead of the upside, I think it's the same thing. I think Bitcoin is much more resilient against downside than stocks. Give me one stock that's crashed 80%, four times now in the last 10 years and recovered every single time. Like, you can't. I'm pretty confident of that. Maybe there's one minor penny stock that's an exception, and I'm sure someone will find it and then hate on me for that. But point being that because it's fully reserved, every time there's a downside, it doesn't gap down to zero. And because it's fully reserved, when it makes that new all-time high, when there's new adoption, it could go significantly higher than what other systems can, because they can't sustain either the downside or the upside volatility, and Bitcoin can. So, yeah, your precise question, I think, about adoption cycles. Yeah, I think Bitcoin will continue to be volatile, and people that buy Bitcoin should know it'll continue to be volatile. And this will probably offend people, but whatever. I think Bitcoin will only become more volatile. And I think a lot of people don't think that. They think, oh, someday Bitcoin will mature and then it will lose volatility. And I'm like, no, 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 no. Bitcoin should, in my opinion, become only more volatile in the future, because the rate of technological change is only getting faster. The rate at which fractional reserve systems trend to zero is only getting faster. And the rate at which the marginal cost of energy production is going to zero is only becoming faster. And so if we assume those things, and the total number of net humans in the world is becoming volatile, there are more humans. I mean, we have larger populations. So point being that as the world gets faster, like, Bitcoin should only get more volatile. Maybe there are brief periods where it's not, but I think a hyperbolic curve is very probable. So yeah, I think someone buying Bitcoin today should fully expect it to go up 10x in price in a very short period of time, and then expect it to crash 50, 60, 70% of the time. Again, if you're measuring it in terms of US dollars, if you're measuring it in terms of 1 Bitcoin equals 1 Bitcoin, then it's never volatile. But
I'm glad that you're taking the time to learn about Bitcoin, learn about Bitcoin's potential future value, both in terms of political currency units and on society as a whole. And I'm really glad that you're taking the effort to study and educate yourself about Bitcoin. However, I must make this message incredibly clear. If you are learning about Bitcoin, you must begin also learning about self-custody and taking possession of your own keys. This is really, really important. You can watch as many YouTube videos as you want talking about how Bitcoin is going to skyrocket in fiat price and how the number is going to go up. You can talk about that all you want. You can daydream about this kind of vertical spike action for Bitcoin. You can daydream about this all you want. But my encouragement to you is that this is not a meme. This is not something to be taken lightly. We can think that this is a good thing, and it is a good thing ultimately for Bitcoin's long-term adoption, but this is real. Okay, this really happens in countries. It may not happen in your country for some time. It may happen in a stair-step fashion, but this is not a meme. This is not a joke. And so, therefore, you need to take self-custody really, really seriously. Okay. I work full-time in self-custody solutions for people. I help people set up their multi-sig vaults. I help people set up their estate plans. I help people with a collaborative custody partnership and collaborative custody models. Okay. This is a chart of the interest we have at the Bitcoin Advisor, the company I work at. Okay. This is not me personally. This is the whole company. We've been in business 7 years. Not a single client of ours has ever lost a single sat. Okay. We have a good number of clients, and this is our demand. My point in showing you this chart, my point in showing you this message right now is that it is increasingly urgent, increasingly important that you begin taking self-custody very seriously. I'm telling you, I'm on the inside of this all day, every day, 6 days a week, and demand for self-custody is skyrocketing, okay? The kinds of clients we have, the number of clients we have, the conviction in the clients we have, it is only going up, okay? And people are booking meetings with me weeks, okay, in advance. In some cases, over a month in advance. And we are in bear market, okay? This chart right here is from October 2023. Okay, like incredible low interest globally in Bitcoin, and our demand is still skyrocketing, it's still spiking. And my encouragement is that if we have a bull run, if we have parabolic spikes such as this, where Bitcoin goes rapidly upwards in terms of price, if we have these periods of time, okay, transaction fees are going to spike. Okay, exchanges are going to halt withdrawals. Okay, people are going to panic. They're going to smash buy any price. Okay, it's going to be increasingly difficult to have any time with people to help you in your self-custody setups. So first and foremost, whatever you do, whether you work with me at the Bitcoin Advisor, whether you go somewhere else, whether you figure it out on your own, whatever the case, please start figuring out self-custody, hot wallets, cold wallets, cold wallets, single sig, multi-sig, whatever you do, just start figuring it out now, because I'm increasingly alarmed by the number of Bitcoiners that do not have self-custody. So please, if you have any Bitcoin self-custody, but especially if you have a large amount of Bitcoin in self-custody, please start taking this stuff seriously, because it's only going to be increasingly important in the future. And so, if you'd like to work with me, if you'd like to hear my opinions, perspectives, and ideas on this topic, you can find me at the Bitcoin Advisor. This is precisely why I work at the Bitcoin Advisor, because I believe this is such an important topic here, okay? You can find me there. You can have expert guidance on how to self-custody Bitcoin, to buy, secure, and store it properly for the long term. We can have tailored strategies for you, what your long-term vision is, both for yourself, your own individual future, your retirement, and for your future generations as well. Again, multi-sig vaults, estate plans, all these things for you, okay? You can just book a free meeting with me here, and the link down below in the description. Again, the first consultation is completely free, where we can talk about your priorities and see if there's a value add both for you and for the Bitcoin Advisor as well. And again, our goal is to help you have generational wealth for you and your loved ones and your children without losing sleep, okay? And that's why not only do you get a free initial consultation, but you have dozens and dozens of pages of education about multi-sig, self-custody, how to store your Bitcoin properly, things to avoid, things to pursue, okay? Again, dozens and dozens of pages of free education for you to be learning about this increasingly important, increasingly urgent topic, okay? And then you can learn further about the Bitcoin Advisor, and why we provide much more value for half the cost of our competitors. You can learn about all this and more in that link in the description, where you can book a free consultation with me at the Bitcoin Advisor. So again, whatever you do, whether you work with me at the Bitcoin Advisor or you try to figure out on your own, please just start taking action now. Because in a couple of years, higher and higher net worth people are going to be entering the space and demanding self-custody. Okay, more and more companies, more and more charities, more and more pension funds, more and more churches, all these things, all these groups of people, all these entities are going to be coming into Bitcoin very quickly, and they'll be willing to pay the transaction fees. They'll be willing to pay whatever fiat price and get for their sats. They'll be willing to do the self-custody as fast as possible. And so my encouragement to you, again, I'm glad you're enjoying these videos. I really appreciate you subscribing and commenting, being a part of these videos, and increasing your Bitcoin education. But please, please, please do not stop at the end of this video. Immediately after you watch the end of this video, please start taking your self-custody seriously, whether that's with me at the Bitcoin Advisor, again, link in description, or it's on your own. Whatever the case, please just do it. Thank you.
I know you've been talking to Peter Dunworth, who beat you on the most bullish Blockware Intelligence podcast ever recorded. And because you originally held that title. Have you been talking to Peter? Like, what have you guys been talking about? What is your take on his, extremely bullish,
Yeah.
future for Bitcoin? What are your thoughts?
Yeah, so I guess first of all, it's not a competition. I'm not trying to be the most bullish. I just or trying to be the most moon boy. It's like it's literally just as ironic as it is, from my risk averse opinion. Like if this thing is as low risk as it seems in comparison to everything else, its value should be orders of magnitude more than everything else combined. So that's the whole reason that the bullishness is the great irony is that Bitcoin, if we're correct, is lower risk and higher upside than everything else, which is what makes it so obvious and so mind blowing. People don't take at least a 1% allocation or 5%. But anyway, it's not a competition. But Peter, he has price. Um, I don't know if he would call them targets, price targets, but he has very high numbers. He just throws them around in the same way that people think I'm insane throwing $100 million per Bitcoin around. He's throwing around like 7 billion or 100 billion, and it's yeah. I like yeah. Peter's been a good new friend of mine. We've spoken maybe 5 or 6 hours in total about his thesis. Well, actually, no, more than that probably at this point. But yeah, I've recorded a podcast with him, hopefully, and I hope to release that. It's basically diving more into depth of his methodology. But his whole idea is similar to it's similar to others, but it's expanded on to include derivatives markets and everything else of that sort. So I don't have as much experience, obviously, in accounting as he does. He has a background in that, so I would defer to people with that background. However, with that said, as I've read much of his work and I've listened to his thoughts, I mean, I don't know if it's right. I don't know if he's correct or fully correct, but if there's even a 1% chance that he's correct, it is astronomical. I mean, it's simply absurd. Even if he has a 1 or 5, 10% chance of being correct, it's more than we can possibly fathom. And I think there's a much higher probability he's correct. Maybe it's 10%, maybe it's 90%, but ultimately, at the end of the day, that's all you need to know because Peter doesn't know the future. I don't know the future. Jerome Powell doesn't know the future. And ultimately, as someone that's trying to preserve our purchasing power into the future, our priority should be what are the possible paths forward, what are the possibilities, and what's the probability of each of those paths occurring, and then how do I adjust based on that thesis, based on that information. And I think Peter's idea of Bitcoin being used as that like global accounting settlement network and just all those ideas which are very far away, but it's truly mind-blowing of how high Bitcoin's price in terms of dollars could go, and how much more importantly for people listening, how how insignificant all other accounting systems in the history of man could become in comparison to Bitcoin. It's literally like comparing modern banking to Sumerian tablets. It's like, they'll still exist, but they'll be in a museum. So, yeah.
Yeah, Peter has some awesome takes that are like really mind bending, and it makes you really think about what's going to happen with the
Yeah.
future of Bitcoin. I'm excited to listen to the podcast you recorded with him. That'd be great.
Yeah.
We've got him coming back on the Blockware Intelligence podcast. We've got his brother coming on the Blockware Intelligence podcast too. So those will be fantastic
Yeah.
episodes. But like thinking back, oh, go ahead.
Well, I was gonna say, and I hope Peter does make the rounds because I hope people come out and debate him. That's one of the reasons why he wanted to talk to me. He was like, Luke, I have to talk to you. Take a look at this and this, and he sent me a bunch of stuff. It was like, tell me where I'm wrong. Tell me where the thesis is wrong. And as a side note, I think it's what a lot of people outside Bitcoin don't realize. Like that's why we talk so much, is because we're always trying to figure out where we're wrong. And that's why he wanted to talk to me, and I'm glad. But anyway, I hope he keeps going these shows, and that people actually debate him that have the education, the background, and the intelligence to, uh, yeah, just try to better the thesis and find flaws because I can't this far, and that's the exciting and terrifying thing. So
Yeah, and I mean, it's his price targets are kind of crazy, but I like generally agree with his thesis and your thesis in that thinking back to, something like 1970, to purchase or to be able to store a terabyte's worth of data may have costed $1 billion back in
Yeah.
1970. It may not even have been possible, right? Now it's like, yeah,
Yeah.
exactly. You have one right there. It probably costs maybe $100 or so. And it's
Yeah.
so like that's the rate of deflation that has been occurring in certain industries over the last 50 years, but it could be starting to occur in all industries over the next 50 years as technology accelerates faster and faster. And we have this new unit of account where it's the only thing in the world where we can commit infinite amount of time, infinite amount of energy, infinite amount of resources, and we can't make more of it. And when you put it that way and you zoom out on a long enough time horizon, it just seems kind of hard to argue against.
Yeah, yeah, and that's ultimately, like I said earlier, that's where my bullish price predictions come from. It's like, 'cause it's like I'm not a trader, I have no idea. Like, it's just I'm just taking one step at a time. Like you said, it's like, okay, I have the assumption we can't find a way to destroy this thing. If Vladimir Putin and Kim Jong Un and presidents of the United States can't figure out how to kill it, like I can't figure out how to kill it. So it's like I take that assumption, it's probably going to survive. Okay, then I take the pre-assumptions, then I take the assumptions of what makes good money, and then I take the assumption that humanity will continue and not self-destruct and have a prosperous future, and combine it together. It's like, well, the best money absorbs all that productivity, and if this continues to survive, it's the best money. Well, then it should absorb all the. I mean, it's really that simple, and that's what has been exciting. When I went to Boston and gave this whole thesis, I was like, that's what's exciting for people to kind of have that click and understand the that Bitcoin is not a pessimistic. Oh, the U.S. dollar is going to die, and we're going to go back to blah blah blah, and like apocalyptic, dystopian world. It's like it's inherently the Bitcoiners inherently are not pessimistic on the world. They're just pessimistic on scams. I mean, so anyway, yeah,
Yeah, and I think like some people would say, like you say, the world is going to get so much more productive, and some people would argue, oh, well, it's obviously those companies are going to capture that wealth creation. But then you got to look back and argue, yes, that maybe that's happened in the past because people have had no other way to store wealth, so
yeah,
they kind of just stored wealth and equities. But in reality, it's like all of these companies are directly competing with each other, and the profits that they're making, you can't just make profits forever. Like it's not that easy. Markets are relatively efficient. If someone's making profits, you have 8 billion other people trying to attack and take those profits from you. And it's like, okay, if everyone's competing and everyone's getting insanely productive, where's all of that actual productivity, all that value going to get captured? Well, it's like in the best money, and the best money is
yeah,
Bitcoin. So you put out a really good thread recently about how to become a millionaire, and it was really interesting because it only required $300 today.